The S&P 500 skyrocketed up in the last 30 minutes of the market. Do we know why? No, not really, but we're going to try to deduce what happened in the market today. We're going to take a look at the large tech stocks, the S&P 500, the NASDAQ, the Russell, the VIX, the crypto market, the Forex market, the large tech stocks. We're going to put everything together to get a very, very good contextualized view of what the next steps are in the market. I hope you guys are enjoying the content that I'm putting out. And with that being said, let's get started with the video. All right, first and foremost, this is a 1 minute time frame of the S&P 500 futures. All right, and as you can see, for the last maybe 2 hours of the market, we were consolidating in a very, very choppy range here. Okay, we were holding support at the 64.30 level, holding at a very, very choppy range. This was not tradable. Small moves to the upside and downside had absolutely no follow through. But why is this level so significant? Now, this is the daily time frame of the S&P 500, right? The reason why that level that we were just looking at was so important is because what I did a few days ago was I made a fib level from the lows to the highs, essentially, of this large green candle. Remember when Powell was speaking, we had a huge spike upwards on that Friday? This is that candle, okay? So I made a fib level of that candle. Just so happens to be the 50% fib level of this singular candle is where we ended up consolidating. This is why looking at fib levels is so absolutely necessary, because algorithms use fib levels as support and resistance levels as well. So you could clearly see we held it absolutely phenomenally. Now, with that being said, this was a very important level. The market really, really skyrocketed. And the longer we sit at a level of support, if we stay too long, then it ends up falling over. But the difference with today was that we already had a big move to the downside. So this is the 1 minute time frame again. We had a big rip to the upside. We were long. I got short down here. I said the market would hit 644 on the SPY. That's exactly what ended up happening. And we ended up going short, and the market ended up falling. And now the thing is that there has to be ebbs and flows to the market. When the market drops this aggressively over and over again in the same day, right? And then you come to a major level of support and you start to consolidate. Does this make sense to now start to try to go short down here? Absolutely not. This is not a good time to go short. This is a bear trap. To go short into weakness, to go short into the hole is very, very risky. That's how you lose money, guys. This is not what you want to end up doing. You don't go short into weakness, and just purely based off of a technical setup, holding this level of support, the market rallied because we dropped again, multiple drops, held a level of support, ended up bouncing. This at a very major level of support. Sometimes trading is really that simple. And that's that for the S&P 500 on this smaller time frame. But then when you look at it on the larger time frames, we're going to take a look at that later on in the video. But first, I want to take a look at the large tech stocks to get a big holistic view of which direction the market can go. And the reason why we look at the large tech stocks is because we need to monitor how they work, because the large tech stocks move the overall market. What's going on in the large tech stocks affects the S&P 500, the NASDAQ, the Russell. All right, so let's get started and look at Apple. All right, so now this is a daily time frame of Apple. All right, and now Apple, I just want to purely show you guys something very, very simple. I want to zoom in a bit on the Bollinger Bands on Apple here, okay? So what we're looking at right now is the upper level of the Bollinger Bands are starting to constrict a bit. And the lower level of the Bollinger Bands are also starting to constrict a bit. This usually tends to a large move, right? But what's interesting is the direction of the large move can be heavily dependent on which direction the Bollinger Bands are moving, okay? So just remember, the upper bands are falling lower. When the Bollinger Bands, when we're trading outside of the Bollinger Bands to the upside or the downside, price wants to return back inside. It's an algorithmic means of reciprocity of where the market wants to return in terms of the just essentially where math wants to make the market remain. Okay? Very, very simple. That's all you need to look at with the Bollinger Bands. Where the market wants to return. Nice and simple. Okay? Now, the moves to the upside that occur on Apple, so for example, this is November of 2024, right? When the Bollinger Bands are pointed upwards is when there is the most room to the upside on a stock. So as you can see here, the price of Apple was hugging the upper level of the Bollinger Band, and we continued to rise. Apple never really traded outside of the upper bands because the upper bands were pointed vertically to the upside. Whereas right now, the upper bands are pointed down. So this is the complete opposite sort of dilemma that essentially occurred when we were rallying prior on Apple. And as you can see, when there's a large downward move on a stock, in this case Apple, the lower level of the bands point downwards. Okay? So just very simply, if the upper level is pointed upwards, that means that there's a lot more room to the upside. If the lower level of the bands are pointed downwards, there's a lot more room to the downside. When we're getting a situation like this, where we're trading right at the upper bands, but the bands are pointed down, and you can see that the upper band acted as a perfect level of resistance today. This is not by chance. This is by algorithmic design, because banks and hedge funds have algorithms that trade based off of these technical metrics that occur. The more you understand why these technical metrics occur, the higher the ability. Essentially, it's a you take the shades off of what is going on and you get to see the market clearly. So this is essentially what's going on. You see the upper level of the Bollinger Band constricting and falling lower. That's not a good sign for more upside movement. Okay? So that's essentially what's going on. The other sort of concerning thing on Apple, yes, we know that Apple just had a really, really amazing news. It's up 4% today. Spectacular. But technically, it is now approaching a very major level of a fib level from the most recent highs in December 2024 to the most recent lows in April 2025. The 786% fib at 240. So psychologically, 240 is also obviously a very, very major psychological level of resistance. Every $5, $10 on any stock, it's a psychological level, right? Except 240, not only did 240 act as a major level of support and resistance in the past, it also is, just so happens to be, a major fib level as well. Not only that, not only are we approaching 240, but we also have the upper level of the Bollinger Band pointed lower. So this is not, obviously, yes, we know Apple just skyrocketed up, gapped up, spectacular. But this is not where you want to start going long on Apple. And that's really, it's not concerning, but in the immediate term, this is not where you want to start getting greedy. Oh my God, Apple skyrocketed up. This is how people lose money. This is how people get bad averages on their stocks. It's because they see a lot of strength. Oh my God, wow, the stock is up 10%. Maybe I should buy some right now. No. Everyone that was already in when the market was weak, when the stocks were weak, when the stock is up 10%, they're taking profit. What happens when you take profit? What happens when you take profit? What is the mechanism that occurs when you take profit? You sell, right? You sell. What happens when you sell a stock? It falls. If the majority of people are selling a stock, it is going to end up falling. So now, once again, in my opinion, we could continue to rise by all means. Is this the most ideal situation to buy? Absolutely not. And these two reasons, with the Bollinger Band as well as where we are in terms of 240 as a resistance, Goes to show that this is not the best time to go long. So that's that for Apple. Let's take a look at the rest of the stocks. Google, on the other hand, Google is trading outside of the upper bands. It's in the sky right now. It doesn't want to come back down. So Apple was showing a little bit of resistance. It was trying to play a little hard to get. Google is gone. Google, the upper bands, vertical to the upside. What were we just looking at? When the Bollinger Bands on a stock are pointed in a certain direction, means that there's more upside potential. And yes, generally when you are trading outside of the upper bands, price wants to return back within. When you are trading outside of the lower bands, price wants to return back in. Spectacular. But when price skyrockets like this, based off of earnings or based off of news, that's not when you want to trade based off of the Bollinger Bands. You only trade off of the Bollinger Bands when there is a technical weakness or extreme technical strength. If there is no public information, or if there's no public information that's occurring on the stock, the Bollinger Bands do not apply. Okay? Right now, Google is on cloud 9, and we can't really judge. Everyone is on their own journey. So we have a target to the upside on 255 on Google, okay? This is a fib extension level from the most recent lows to the most recent highs. It is what it is. So 250 is going to be the target to the upside on Google. We're at 232 right now. That's that. Nothing else to look at. So I hope you guys, once again, is this the time to go long? Is this the time to go long on Google? The stock is literally up 9% today. We're at all-time highs. Is this the time to start going long? I don't know. You tell me. Leave a comment below. Let me know. If you guys do go long, I have a town share in Mogadishu to sell you guys. All right? This is not where you want to go long on the stock. All right? Please be patient. There's going to be better opportunities. Don't chase into strength. Okay? 250, target to the upside. 255, the fib extension level to the upside. All right? Nice and simple. That's that for Google. This is a daily time frame of Microsoft. Microsoft's having a hard time to bounce, and you can see that it's holding support. Congratulations. $500 is holding. Great level of support. Spectacular. Is this the time where you want to go short? No. Is this the time where you want to go long? It looks like a way better long opportunity than freaking Google and Apple. Microsoft is holding a level of support. We're trading at a level of support. This could be a very nice, tight stop loss. High risk reward trade, in my opinion. Awesome. If it drops below this level of support, oops, it didn't work out. But at least this is a better risk reward than trying to buy into all-time highs. So Apple, it is currently one of the losers. Holding support. Having a hard time. Hard times don't last, guys. Hard times don't last. The longer you're sitting at a level of support, the higher the probability that support level holds, and we end up bouncing. Okay? So, it can't be too long. If you get too comfortable at a support level, we've seen time and time again that the support level breaks. Because eventually people get tired of your shit, right? But this is not that long. We are just, we just hit a bit of a rock bottom situation on Microsoft. It's not like we've been here for that long. We're not on our friend's couch. We're not jumping from friend to friend, asking people for money. Oh my God, we need help. It just happened. All right. Microsoft's been a winner for a very, very long time. This pullback just happened. Have some patience with Microsoft. All right. Microsoft is trying. Right. So that's essentially what's going on. $500 is holding. We closed at 505. Nice and simple. Nothing crazy. We're not getting a lot of extravagant strength. But, we have that level of resistance at 512. In terms of a risk reward, Microsoft is good. This is, when your friend hits rock bottom, but you know that he's very capable, you're investing in a company, right? So basically this is better risk reward. You don't you don't want to invest in a company that has always been weak and try to buy. This has been one of the absolute winners, one of the main winners of AI related companies. ChatGPT, tons of people are. This is the future, right? So we're holding support, and this is a good time, in my opinion, to end up this. This is a better trade. All right, so there's that for Microsoft. Daily time frame of Meta. We're in a falling wedge. Falling wedges are extremely bullish patterns. We are trying to maintain above 730. This is generally a falling wedge is a bullish pattern. What's also interesting on Meta is that we were just trading outside of the lower level of the Bollinger Bands. What do we know about the Bollinger Bands? When something is trading outside of the lower level, we want to return back in. So this gave enough oomph to Meta to get a bit of a bounce. That's exactly what ended up happening. We opened at 726 yesterday, and now we're at 737, like the plane. All right, anyway, don't arrest me. So 737, right? Spectacular. But just, do you see how perfectly sometimes the setup just works? This is a falling wedge. Where are we hugging this trend line? We've looked time and time again at how beautiful price action works, how symmetrical certain things are, how much patterns play out over and over again. So this is just really, really beautiful. And, like once again, the main level that really needs to maintain itself is 730. If we end up pulling back to 730, sure, we could end up bouncing back, but if we break 730, we're most likely going to come and retest the lower level of this falling wedge. And then that's when, like, down here becomes a much juicier level of support, because it comes back down to around the 700 level. We had monstrous levels of support down here, and this is currently the situation that's happening on Meta. And with that being said, Meta is showing some sort of bullish bottoming out. Microsoft is showing some sort of bullish bottoming out. Wow. Sally sells seashells by the seashore. All right. Meta, bullish bottoming out. Microsoft, sort of bullish bottoming out. Apple in the sky, hitting a level of resistance. Google in the sky. No care in the world. We're going to take a look at what the other tech stocks are showing. But so far, Apple and Google are skyrocketing. Meta and Microsoft are at support and bouncing. Tesla, I don't really know anyone named Tesla. But the stock, it's trying to do its thing. It bottomed out a bit. It held 330, right? 330 was a major level of support. We were mentioning that yesterday. We had a bit of a small little green candle, held support. 330 held. And where did we end up failing at a level of resistance? Ding, ding, ding. Fibonacci level. 786% fib, the 343 level. Simple. It's simple. You just have this on your chart and you see levels of support and resistance. What are you going to do? I mean, this is really, really simple. But now moving forward, the 330 level needs to hold. And where does the market need to break above for a continued move higher? 343. Nice and simple. So this is currently what's going on Tesla. Tesla is bottoming out. Microsoft is bottoming out. Google and Apple are strong. And Meta bottoming out. What is going on with Amazon? What a surprise. Amazon is also bottoming out. We had support at 222. What did it want to do? It held support. And it bounced a bit. So we are now at 226. Amazon is also trying to fill the gap from over the weekend that we had a gap down. And the reason why Amazon is showing a bit more weakness than the other large tech stocks is because Amazon is heavily dependent on economically sensitive stocks. Amazon is an economically sensitive stock. If people do not have that much money to spend, people are not going to spend money on Amazon. And what ended up happening today was the Russell 2000, which is the basket of stocks that measure economically sensitive stocks. The Russell 2000 was red today. It was the only index that was red. The SP 500 and the NASDAQ were green. So with the Russell 2000 being red, obviously it showed that stocks that are influenced by the Russell, for example, Amazon, would also underperform. Stocks that are not as influenced by the Russell, like these other large tech stocks, are not going to be affected by the Russell that much. So that's currently what ended up happening with Amazon. Still bottoming itself out, but Amazon is more heavily influenced by the Russell. And we need to see Amazon break back above 230 for a continued move to the upside, which is, this upside target. Until then, obviously buying at a level of support is always the way to go. Now that we're in between 222 to 230, this is a 1-to-1 risk-reward ratio. It's not the best opportunistic time to go long. Going long down here on Amazon, closer to a level of support, would have been a much higher risk-reward, and you could have had a nice tight stop loss below this level of support. And that is the way the cookie crumbles sometimes. And yeah, now that we're in between a major level of support and resistance, not the time to go long. So I hope that makes sense on Amazon. Netflix bottoming itself out, showing a bit of support, showing a bit of oomph at this weakness. Held 1190, now broke above the 38.2% fib at 1220. Simple. Nice, simple strength. One of the losers showing some strength, right? All these tech stocks are bottoming themselves out. Everything is showing a bit of strength. Everything is showing a bit more potential to rise. And that is very, very important for, essentially the overall market. Every single tech stock that we just looked at is showing some sort of strength. To top it off, we're going to look at NVIDIA and AMD. All right, so the chips. NVIDIA closed and opened 2 days in a row outside of the lower level of the Bollinger Band. This is extremely... It's not weak, because what generally tends to happen is there tends to be a bit of a bounce. This usually becomes an amazing, amazing buying opportunity, because when something is this far algorithmically overextended to the downside, price needs to bounce back. When something has multiple days where we're not only just outside of the bands, we had 2 days in a row where we opened and closed outside of the bands. This is not the time where you want to go short. This is not the time where you want to go short on NVIDIA. Great. We can capitulate. We could drop another $4. That doesn't make it a good trade. This is not the time where you want to try to go short into this extreme, not even just technical weakness. We didn't just have a red candle. We're algorithmically weak to a point where institutions are going to be looking to buy the dip. They're going to be looking to buy this weakness. 170 is a major level of support. We held above 170 2 days in a row, and we're trading outside of the lower bands. Whereas NVIDIA is basically showing a really good opportunity to go long. It's sort of similar to how bad it would be to go long on Apple, right? We were just looking at Apple. Apple did not look good to try to go long. NVIDIA is really starting to look pretty decent to go long. And then when we look at AMD, AMD is starting to bottom itself out as well. We held 158. We broke above 160. We broke above and held 160 on AMD. We're holding 170 on NVIDIA. The large tech stocks as a whole are showing strength. Yes, great. The overall market bounced aggressively in the last 20 minutes of the market, but technically, everything is holding support. So just in terms of a long opportunity, pragmatically, this is the first time in weeks that we've been making these, this is the first time in weeks where everything is coinciding to look pretty bullish. Pragmatically, that's what's going on. That is what's currently happening. We're going to take a look at crypto as well. We're going to see the same thing. But that is currently what is going on, not only on the chips, the economically sensitive stocks, Microsoft, Google, Amazon, Tesla, Netflix, Meta. It's kind of insane. So that's that. Let's go ahead and take a look at the S&P 500 and the NASDAQ as well as the Russell. All right, so this is a daily time frame of the S&P 500 futures. Yesterday I was saying this would be the make or break spot for the market for where people are going to start taking profits and shorting. The reason why this is such an important level here is because, so what I did was I created a fib level from the most recent highs to the most recent lows. And what do we have here? This 50 to 618% fib here is very, very important. This is the golden zone. In terms of a Fibonacci level, this is very, very important. Now, what you have to think about is you have to put yourself in the mindset of a person that went long into this weakness. Where would they take profit on these longs? They would take profit on the longs at a major fib level, at a major fib zone. I'm telling you guys, this is that major fib zone. This is another reason why today the highs was at right here. This was literally the highs. It's another reason why, in terms of my day trades, we went long into 644. And I said the market would drop at 644. The SPY would drop at 644. It's because this is the best time where people would start taking profits on their longs. That's exactly what ended up happening. And we dropped very aggressively afterward. It's because of the fib levels. If you were in my Discord server, we made a shit ton of money today because of the fib levels. Because I mapped out in yesterday's video, this is what's going to end up happening with the market. We're going to bounce to this level. We're going to fall from here. And then we're going to go short at this level. That's exactly what ended up happening because of the fib levels. So now this is a make or break point for the market. Yes, we had a big spike to the upside. Is this spike going to continue? We're going to have to see. But aside from that, this and within this zone here, these would be the two best spots to go short. And given how weak this sort of setup was, the market needs to really make a decision here. Are we going to really drop? Because it needs to occur. The drop needs to occur within the next few days. If we don't get a massive red candle, then the market will most likely just hold the 38.2% fib here at the 64.30 level and end up bouncing. The news on Apple and Google absolutely saved the market because these two red candles that we just saw denoted extreme weakness. If there's only two stocks on the entire NASDAQ that are really, really bullish right now, that caused this massive spike to the upside in Apple and Google. If Apple and Google were not bouncing, the market would have capitulated. It would have died. So now the market is basically hoping for two main things. If Apple and Google are going to continue to bounce, or if money is going to go into the losers, if the money is going to go into Microsoft, the Tesla, the Amazons, for a continued move to the upside. One of those two things needs to be true. I don't think Apple and Google are going to continue. The second option needs to occur. These losers need to start getting a bounce. And that is going to be the make or break point for the overall market, for the tech stocks, the S&P, the NASDAQ. Okay, so that's that for the S&P 500 futures. Let's take a look at the SPY. This is a daily time frame of the SPY. Do you guys see how easy it is to trade when you are aware of the Fibonacci levels? When you're aware of these support and resistance levels, it makes it so easy to day trade because you have to look at what's going on a larger time frame, because what happens on a larger time frame affects what's going on the smaller time frames. We went short exactly at 644. I went long. As we broke above 642, I said we're going to hit 644 today. We hit 644 and we went short. It's so simple, guys. It's so simple. And then where did the market end up bouncing? At 640, right? So it's really, really simple. And once again, this is a very, very major, important zone. We filled the gap, right? We could see that we filled the gap. We had a gap here at 643.14. We filled it, obviously, right? And now we are at a major make or break point for the overall market between the 50 and the 618% fib. Dropped at 644. Where does the market need to reclaim? It needs to reclaim back above 644, 644.50, 645-ish area for a continued move up. But this area right here is where the market and where people are going to start taking profit. We saw a lot of profit taking today. The market dropped from 640 to 644 to 640 today. It's a $4 drop. But then we consolidated at that support and bounced very aggressively. Now we need to see if us being in this zone is going to be a continuation to the upside or if we're going to start finding resistance at the 644, 645 level. So far, the market is holding right below 644. Do I want to start going long into this rally into the end of the day? No, it doesn't really make sense. But it is a bit too early to try to go short into this extreme strength because we fill the gap. The large tech stocks are starting to bottom themselves out, but we are at a very, very important fib level. When you're day trading, you have to look at the larger time frames to dictate where the levels are going to be for where you want to go long and short. That's exactly what we do every single day. And if you guys want access to exactly where I'm going long and short, all of my trades, we have a monstrous success rate for a reason. I have over a 90% success rate month over month. You could look at all of my trades for a reason. It's because we provide quality like this. So if you guys want access, you guys could click the link down below. You guys could click the link in my bio. You could join, and you will see firsthand exactly what we're talking about. This analysis is applied in real time to actually make money. We don't just commentate on the market like a lot of these other people on YouTube. We don't just commentate, oh, if this happens, the market's going to do this. If this happens, the market... We don't do that. We actually make money. We put our money on the line, and I share it with everyone in the group. And that's another reason why, this community that we're building is a blessing. It's a huge blessing. We're all making money together. We're all learning together. And we're all making our lives as a whole much, much better. It's a completely different feeling when you're able to trade and be on the same journey as those around you. How many people do you know personally that are trying to do better in their life? It's very, very rare. That's the beauty of the internet, is because you're able to make these connections and these bonds with people over the internet where eventually it permeates into real life. You don't get to have communities like this with your friends or with the people from your hometown. A lot of people are haters. A lot of people don't want to see your success. A lot of people don't have your drive. But the beauty of this group is everyone is here to help each other. We all want to help each other. We are all there to lift each other up. And not only that, the best part about it is we're making money together. So no egos, right? I teach people exactly my thought process on what is going on. There's tons of people that are extremely helpful in the group. We all just want to see each other win. So if you guys have been hesitant of finding somewhere, it seems too good to be true, I completely get it. But this is the group to join. I have a long track record. We've helped hundreds of people become full-time traders. And there's half of the people that you guys see online learned from me with proof and evidence. They used to message me to ask me to teach them. So there's a reason for that. And, that's the beauty of it. So if you guys want to learn, you guys could click the link down below and join. And with that being said, let's take a look at the NASDAQ. All right, so this is a daily time frame of the NQ futures. This is the NASDAQ, right? What we were just looking at is all of the large tech stocks as a whole were trying to bottom themselves out. Apple and Google skyrocketed based off of good news, but the NASDAQ is still hovering. In terms of where the SP 500 is, the NASDAQ looks a lot more weak. Now, I want to contextualize, before we continue, I want to contextualize what the market dynamic is for the NASDAQ, okay? So, first and foremost, we took a fib level. We made a fib level from the most recent highs to the most recent lows. Fantastic. We ended up overshooting, right? So, once again, between the 50% fib and the 6.8% fib is a very major zone. It's the golden zone, right? We ended up overshooting above it. So, this candle right here, that overshot above the 6.8% fib, got many people bullish. It got many people bullish. But what ended up happening the next 2 days right after that? The market about faced. The market completely about faced. We closed below the 6.18, the 50, and then we held the 38.2. So this candle right afterward, and this green candle right here, this green candle was a bull trap. Complete bull trap. And the reason for that is because this zone, once again, between the 50 and the 6.8% fib, that's the best time where people want to essentially take profits. So all of the people that bought down here, where would they want to take profits? Mentally, where would they want to take profits? You take profits at a level of resistance. Now, what happens when you take profits? What happens to a stock? Say, for example, so you bought down here, right? What does taking profit mean? It means that you're selling, right? So if a lot of people are selling as you hit levels of resistance, what happens to the price? The price drops. That's exactly why we ended up dropping. And this ended up just really capitulating, okay? So we ended up retesting the lows here. Really capitulated. And the only reason why this market ended up bouncing, the only reason was because Apple and Google had very positive news. If Google was not up 10%, and if Apple was not up 4% in the day, this would drop very aggressively to the downside. Now, moving forward, what does that do for us? Wow, congratulations. Okay, cool. You contextualized everything. The reason why looking at context is very important is because you need to know what market makers and what the algorithms and banks and hedge funds are looking at as well. The next thing that people are going to be looking at is they're going to be looking at a fib level from, again, the most recent highs to the most recent lows. And once again, where is the spot where people tend to take profits from a major bounce? Where do they take profits? Once again, they take profits and things tend to show resistance at between the 50 and the 6.8% fib. Where did we end up failing today? Where did we end up failing? Let's just clean that up. Where the heck did we end up failing today on the NASDAQ? Exactly where? Between the 50 and the 6.8% fib. Not only are we failing on the NASDAQ, but we're also failing on the S&P 500. This is not a coincidence. It happens because it's algorithmically driven. And this is what algorithms are looking at. So the best that we can do is continue to look at what the algorithms are looking at and trade based off of that. We have to be reactionary to what's going on in the market. Regardless of what we think can end up happening, regardless of what we think should end up happening, is completely irrelevant. The market can remain irrational longer than we can remain solvent. Let me repeat that. The market can remain irrational longer than we can remain solvent. Basically, the market can keep doing whatever the hell it wants to do, but we have a set amount of money. We have a set amount of solvency that we have. And if we keep on trading based off of what we think the market can do, we end up losing our money. And the market can remain irrational longer than we can remain solvent. So it's very important to be patient with your setups, but also be open-minded to what is essentially going on in the market. You're not always going to be correct about everything, and it's very important to put your ego to the side and learn from your mistakes, try to become better, and understand things occur over and over again. It's on you to learn from your mistakes. How many times has it been over the years where you look at a trade and you're like, damn, why the hell did I do that? Why the hell did I take this trade? What the heck is good with you, brother? How many times have you lost so much money on a trade because you just didn't sell? It dropped below your stop loss, but you just kept on holding. For what? Because of your ego. You did not want to admit that you were wrong. You didn't want to admit to yourself that you were wrong. And in the process, you ended up losing your money. How many times has that happened? So many times. It's happened so many times to every single trader. To every single profitable trader, you had to go through that over and over and over again. But what ends up happening with us, right, is because we grew up in the educational system where being correct was a big part of our identity. We need to essentially always be correct. We need to be correct about things because it is a big part of our identity. If we're wrong, we fail the exam. So that's why when we enter a trade, oh my God, I'm going to win. I have to win. But that's not what trading is. Trading, you're going to lose. You have to be okay with losing. You're not going to win every single trade. And the faster you start to realize that, the faster you can come to terms with the fact that, okay, it's okay. It's okay if I'm wrong. This isn't a test. I'm not taking the MCAT. This isn't the SATs. If I'm wrong, congratulations. I could sell really quick and I could take the next best trade. But because we've been in school, you cannot use the same principles of success in school to trading. Okay? So this is, it's not just about what you know. It's also about what you unlearn. And to become successful in different aspects of life, you need to learn and you also need to unlearn certain things. So that's currently, it's very, very important for people to realize that. That's that for the NQ futures. Let's take a look at the QQQ. Daily time frame of the QQQ. What are you going to do? Where did we end up falling? You guessed it. We ended up falling at the 618% fib. Right between the 50 and the 618% fib. This is where the market is going to essentially fall. If the market is going to fall, it's going to be between here. Okay? And what did we just look at on the NQ? We overshot a bit, and we ended up overshooting to the 786% fib. But from here, that's where it ended up falling and retesting the lows. Is that going to happen again? We have yet to see. But currently, pragmatically, every large tech stock is showing strength. NVDA is showing a good bottoming out situation. Microsoft is showing a big good bottoming out situation. Netflix, Meta, Amazon is holding support. Google is skyrocketing. There's no end in sight to Google's tomfoolery. It's on cloud 9. It doesn't seem to want to come off of cloud 9. The only bearish sort of tech stock that I see is Apple. And if Apple drops, I don't know how much higher Google can go without getting a bit of a pullback too. It would be healthy, right? So now we need to see if the other large tech stocks can get some love. If that occurs, then, the NASDAQ is going to make new highs. But generally, let's see what ends up happening. No guarantees. But with that being said, that's the overall market. Next, we're going to take a look at the VIX, and then we're going to take a look at the Russell 2000. All right, so this is the daily time frame of the VIX. The VIX, once again, is very, very important to look at because it has an inverse relationship to the market. Inverse means the opposite occurs. If the VIX is rising, the overall market should be falling because it has an inverse relationship. Okay? So I mentioned 17 was a very, very important level. We held above 17. We closed above it yesterday. We skyrocketed up, but it could not hold. We could not hold. We opened outside of the upper level of the Bollinger Bands here on the VIX. What do we know about the Bollinger Bands? When we're trading outside of the upper bands, price wants to return back in. When we're trading outside the lower bands, what does that do? Price wants to return back in. So, very, very simple. Very simple. 17 is a level of support. 17 is a level of resistance. And we were trading outside of the upper bands. It led to a breakdown lower. That also culminated into a big bounce to the upside. And once again, for the VIX to be bullish, we need a break above 17. Right now, this sort of about face leads to another move lower on the VIX. If we get another move lower on the VIX, what does that do? If the VIX is falling, what does that do? It means the market should be rising. Opposites. Okay? That's what's currently going on. Pragmatically speaking, what we're looking at right now on the VIX is the VIX should be getting a bit of a pullback. And the only saving grace for the overall market is going to be the large tech stocks. And a lot of the large tech stocks are starting to bottom themselves out. That's really it. Okay, so that's that with the VIX. Next, let's take a look at the Russell 2000. This is a daily time frame of the Russell 2000. In yesterday's YouTube video, this is exactly what ended up drawing. I showed that the Russell would end up failing at 235. From 235, we were going to drop. The reason for that is because this would be the most opportune time for people to end up taking profit. I left a drawing here. I want to show you guys what was going on. You can look at yesterday's video. This is exactly where I ended up saying the market was going to fall. Exactly where I said the market, people that went long would take profit. What happens when you take profit? What happens when you buy down here and you take profit? What is the mechanism? It means that you're selling. So when you sell, what happens? The stock drops. Right? That's what happens when you sell. So now, what does this show us? 235.50 is a very major level of resistance. We knew that already. So now, with that being said, moving forward, is this still a really bullish opportunity? Not really. Not really, to be honest. If we did not have monstrous news out of Google and Apple, I'm telling you guys, this would be, in terms of a day trade, I promise you guys, this would be one of the best shorting opportunities ever. I would be short with a day trade. If this was a 1 minute time frame for a day trade, I would be short. I have a 90% success rate on my day trades for a reason. This would be one of those setups where I would go short. Absolutely bearish setup. The only thing that's really helping us in saving the market is extreme news. We don't trade based off of extreme news maintaining itself. So this, in my opinion, is still a bearish setup. We need to break above the 235 level. Nice and simple, but is that going to happen? Who knows? But that being said, that's essentially the level to the upside. If that fails into Thursday and Friday, this is going to end up seeing new lows, and 230 is going to end up breaking to the downside on the IWM. And with that being said, there's that for the overall market. Let's take a look at the crypto market. This is a daily time frame of Bitcoin. The reason why it's so important to look at crypto is because it gives an added layer of what is going on under the hood of the overall stock market. So we could see that crypto, Bitcoin specifically, is doing really well. We have a falling wedge on Bitcoin. Falling wedges are extremely bullish patterns. They tend to bounces. It tends to bounce. That's exactly what ended up happening. Where did we end up bouncing? We ended up bouncing to a major level of resistance. Unfortunately, 112 is a major level of resistance on Bitcoin. And for us to really continue to the upside, two things need to occur. We need to get a bit of a pullback and see if 110 can hold. Essentially, 110 needs to hold on Bitcoin. Nice and simple. If $110,000 holds on Bitcoin, we will end up rising higher. Okay? If not, then this can really, really aggressively drop lower. So Bitcoin is technically this is a bullish pattern. We're at a level of resistance, but I'm telling you guys, if 110 fails, if for some reason tomorrow comes, we drop below 110, guys, be very, very careful about buying that dip. We're going to end up seeing 105, 104, in my opinion. And that would be a really good opportunity to go long. This would be I would love it. I would love it. That would be fantastic. But, we did fulfill a target to the upside. 112 is a target. The next target to the upside would be 114. So we could clearly see there's a lot of room to the upside. This is not a time to automatically be bearish, right? You could go long on Bitcoin with 110 as a stop loss. The risk reward is definitely there to the upside. You can get easily 3-4 to 1 RR to the upside on Bitcoin. And to really get a better understanding of how bullish crypto is and how bullish Bitcoin can be, we have to take a look at Ethereum and Solana. So first off, I want to take a look at Ethereum. All right, so Ethereum bottoming itself out. We had a major, basically Ethereum was the biggest winner, right? It was bouncing very, very aggressively, showing a lot of strength. It was the biggest winner primarily because companies were using Ethereum's blockchain to incorporate their technology into the companies. For example, Robinhood, a lot of financial companies, they were using Ethereum on their back end. Idiots. They should have been using Solana. But nonetheless, that's what caused Ethereum to skyrocket. And essentially, Ethereum is, in many people's eyes, the second string to Bitcoin. So where Bitcoin is gold, Ethereum is silver. Wow. It's not the case. Technologically, it's also not as good technologically for it to even be considered a second string. But nonetheless, the market moves based off of Ethereum as well. So Ethereum bottoming itself out technically, right? Held 4,200, broke above 4,400, but now we're holding 4,500 as a level of resistance. Ethereum's at 4,500. Bitcoin is at 112. Both of these stocks are at a major level of resistance. Is that a great sign? Not really. But is this a bullish setup? Absolutely. This is a falling wedge. Falling wedges are extremely bullish. We end up bouncing out. Bitcoin showed a falling wedge. Ethereum is also creating a falling wedge. Nice and simple. If Ethereum can hold above 43.50, which is the 38.2% fib here, we're going to continue rising. Nice and simple. That's really all there is to it on Ethereum. Lastly, let's take a look at Solana. Solana has been the overperformer. It is the student who has a 97, 98% average and is like, oh my God, I don't know if I did well. I don't know if I did well on the exam. I'm not sure. This is what Solana has been moving like recently. Solana has been a complete overachiever. It's doing very, very well. It finishes the homework before the semester starts. It's summertime. It's already done with the homework. Now all it needs to do is review and study. That's what Solana is doing. And Solana had a big, so relative to where Bitcoin and Ethereum are, right? Bitcoin and Ethereum are down here. Solana is retesting 220. This is really, really bullish on Solana. And this is exactly what you want to see in the ebbs and flows of the crypto market. Things are going to take turns. Bitcoin was rallying. Ethereum ended up rallying afterward. And now Solana is taking heed. It's taking its lead, okay? That's currently what's going on. So if Solana can hold above 202, 203, we're going to see a continued move to the upside. And I hope this made sense. I hope you guys enjoyed the video. If you guys have been watching for this long, really appreciate you guys. Love you guys. Make sure to like, comment, subscribe. Do all that good stuff. We have to take a look at hymns. Yesterday, someone said that they wanted to look at hymns. Him and hers. This is a very, very bullish stock. I am really, really bullish on HIMS, and I'm actually going to probably get into some longs on HIMS. Very, very bullish. Spectacular, in my opinion. We have a major trend line resistance here at 46 to 47 area. We break above that, we're seeing 60. So the risk reward to the upside on HIMS is definitely there. This is a really, really good stock, in my opinion, to go long. It also supports Palestine, I believe. The owner of HIMS supports Palestine. So that, by default, is... You don't even need to think twice. This is a really, really good stock. And I am always going to... I mean, just regardless of that, just in terms of the risk-reward, solid opportunity. But yeah, good stock. Good stock. So I hope you guys enjoy the video. Please make sure to like, comment, subscribe. Do all that good stuff. Let's make money tomorrow. Join the group. Let's make money. If you guys have been watching for this long, it's been an hour long. If you're not in the group, we are making money every single day. Now is the time to take the plunge. And the proof is in the pudding. I show you guys my results daily. Every single day, I show you guys how well the group is doing. Today is no different. We ended up catching 112% trade to the upside. We won the place where I went short at 644. I ended up selling that early. This ended up being almost 400% trade. The proof is there. The analysis that I provide, the money that is being made in the group, it's there. You cannot fake this. I don't have hundreds of Discord accounts where people are, oh, wow, Hamid is good. The proof is in the pudding. So if you guys want to join, you guys want to take the next steps to really, really learn how to understand the markets, understand market dynamics, get access to my trades, my trading view indicator, my analysis throughout the day, the link to join is down below. Make trading easier for you. Don't make things difficult. Stop overthinking. I'll see you guys in the group. Have an amazing rest of your day. Take care. I'll see you guys tomorrow morning.